Welcome back, everyone. In today's video, we're discussing Rivian's third quarter 2023 earnings results. As you can see, after hours, up 2%, not bad. Let's dig into the numbers. So, as you can see, the expectations were for a revenue of $1.31 billion with an adjusted EPS loss of $1.32. On an adjusted EBITDA basis, Rivian is expected to report a loss of $1 billion, narrower than last year's $1.3 billion. Now, of note, the thing that I'm paying attention to the most, well, there's a couple things for Rivian, but for me, the most important thing is actually the gross loss per vehicle. And as you can see, it's been getting better. From Q3 2022 of $140,000 loss per vehicle, which is enormous, and it's improved to last quarter. This is last quarter, not this is the previously reported quarter of $32,600. This is not today's results. Today's results will obviously be different. So, given that, what do we have? We have, let's see, we already know the vehicle deliveries, 16,300, and that's produced. They delivered about 15,500 vehicles. Let's see, they're increasing their production guidance to 54,000 vehicles in this year from 52,000. That's good. Let's see, adjusted EBITDA guidance has improved to negative $4 billion. That's for the whole year. So an improvement, that's good. And CapEx guidance reduced to $1.1 billion. So they're reducing spending this year to improve their cash flow issues that they've been having. What else do we have? Production produced 16.3 thousand vehicles. We discussed that. Okay, so compared to the second quarter of 2023, gross profit per unit delivered in the third quarter of 2023 improved by approximately $2,000. So essentially it went from $32,500 to $30,500 according to that statement. So it's an improvement, but honestly, compared to Q1 to Q2, it's not that much of a difference. Q1 to Q2, it cut in more than half, 67,000 to 32,600. That's more than in half. I mean, actually going through 140,000, 124,000, 67,000, 32,000. And then the next one's only 30,000, 30,500. So I was hoping for more in Q3 for their improvements in gross losses. What else do we have? Let's see, scrolling. Nice pictures, by the way. It's a nice looking truck. I want them to succeed. Get quarterly production, quarterly deliveries. Actually, one thing that's sort of helping them a lot actually is Amazon. Their Amazon vehicles. Scaling our service infrastructure, that's good. Enhancing the customer experience through software, that's good too. Okay, so yeah, total revenue for the third quarter was $1.337 billion. What was expected? What was expected was $1.31 billion. So $1.31 billion expected, $1.337 billion reported. So a little bit better than expected, but that was kind of known since we already knew the deliveries. Let's see, gross profit, we generated a negative gross profit of $477 million. And I actually did the math, profit divided by deliveries, and actually it's a negative gross profit per vehicle of $30,648, to be exact. Let's see, what else we have? Gross profit improvement was primarily driven by ramping production and our continued efforts to drive material cost reductions through commercial negotiations and engineering design changes. They're going to need more. Gross loss of $30,000 per vehicle is still too big. The third quarter of 2023 was impacted by a charge for write-downs, yada, yada, yada. Let's see, anything else important here? I don't see anything. So the key drivers for the path to positive gross profit are ramping production and leveraging our fixed costs, material cost reduction, and increasing average selling prices. Increasing average selling price. So they're going to be increasing the prices of their vehicles. That is interesting. Everybody else seems to be decreasing the prices of their vehicles. Now, I do agree they do need to produce more vehicles. Their ramp has been doing well. Let's go back up above. The production ramp is like this, so it's been going well actually. It's been growing nicely from, let's see, 13,900 units last quarter to 16,300 units this quarter. So that's a nice ramp. So the ramp's going nice, no issues there. It just needs to go a little faster. Because they're still at about a third of their current Illinois factory. Their Illinois factory's capacity is about 150,000 units. So they're at about a third of that total capacity. So there's a lot more room to ramp at their current facility before they transition to their Georgia facility and start building that. And they haven't begun construction of their Georgia facility yet. I'll discuss that in a second. But that is important to know. What else do we have here? Operating expenses and losses. Operating expenses third quarter grew to $963 million. That's expected because, they're making and selling more cars. That's fine. No problems there. R&D third quarter was $529 million as compared to $452 million last year. SG&A, yada, yada, yada. So net loss for the third quarter was negative $1.4 billion. So that's an improvement over the previous year, which is expected. The previous year, they basically weren't making any vehicles, but still improvements and improvements. Adjusted EBITDA. Adjusted EBITDA for the third quarter of 2023 was negative $942 million. What was expected? What was expected was adjusted EBITDA. They're expected to report a loss of $1.04 billion. So that's good, actually. 1.04 to $942 million. So a beat of about 60 million. So that's good. Net cash used now. So their net cash was negative $877 million. CapEx was negative $190 million. So you see CapEx actually isn't really that indicative of a production ramp. You'd expect this number to be going up actually if they're ramping their vehicles in Illinois. So I'm kind of curious about where this $190 million is going and why it's decreasing instead of increasing, trying to increase production at Illinois. But as they go to Georgia, this number will definitely rise significantly as they construct the new factory. Liquidity and free cash flow. We ended the third quarter with $9.1 billion in cash equivalents, and short-term investments. That's a decrease from about $10.5 billion, I believe it was, the previous quarter, if I'm not mistaken. Negative free cash flow of $1 billion. Also note this cash includes their new loan. They took out a loan on this capital raise recently. They took out a $1.5 billion loan, as reported right about here. So $1.5 billion in convertible notes. So it's interesting that they lost cash even with that $1.5 billion injection. Maybe this didn't get executed yet. Maybe it's not executed yet. I'm not sure. I'll have to look into that. Let's see, negative free cash flow, negative $1 billion. Okay, so it begins here, talking about Georgia. We continue to take steps to further strengthen our balance sheet as we develop our next vehicle platform, the R2, which will be, this is make or break for the company. The company will succeed or not succeed based off of the R2. The R1 is not going to produce the profits they need in order to stay afloat. They need the R2. Just like Tesla needed the Model 3, Rivian needs the R2, and they need it to ramp. This is their compact SUV. and they need this on the market as soon as possible. There's estimates by some analysts that the R2 is going to be arriving in 2026, and this will be developed in their new plant to be developed in Georgia. They haven't started producing that manufacturing facility just yet. Oh, in October, we completed our green convertible senior notes offering. Oh, okay, so they did execute it. Okay, this does include the $1.5 billion. See, I didn't read this beforehand. I just highlighted a couple things. Okay, so the offering was not complete until after quarter end. Okay, I reversed what I just said. So they're going to get $1.6 billion net after proceeds, but that will be affected in the next quarter. So that $9.1 billion does not include the $1.5 billion from the loan. Okay, that makes sense. Yeah, I was trying to, be honest, keep things straight. If I make a mistake, I'll admit it and move on. So yeah, they're producing 54,000 vehicles this year estimated, about increasing it from the 52,000 from the previous guidance. Everything else we kind of went over. And that's not important. Let's see, this stuff we discussed. Nothing too special there. See, the main thing also is their debt. So their debt's going to be increasing, actually. So currently it's, as of this reporting, it's $1.23 billion. It'll be increasing by another $1.5, $1.6 billion soon in the next reporting period. And they're going to be incurring significant, actually, interest payments on that. But still, though, for a company in their position to have $11 billion in cash, $11.5 billion, and $1.2 billion in long-term debt, and $270 million in short-term, it's actually a pretty good position. They just need to improve their losses, which it's let's see, where is it? Performance. So yeah, gross margin is negative 36%. They need to improve that. Gross profit per non-delivered vehicle. Hey, I just calculated that number. I was right. I can do math. Total operating expenses, loss from operations, not loss. Let's see, not loss. You can read it yourself if you like. Free cash flow is negative $1 billion. We discussed that. Stock-based compensation. That's fine. Where's the net loss? So yeah, this is their cash, and then this is their short-term investments. So you add those two together to get the $9 billion that we saw above. So there's a significant decrease in cash versus, well, also keep in mind this is for a period of time. This is from December 31st, 2022 to December 30th, 2023. So it's kind of odd because this isn't quarter over quarter. That's what I'm trying to say. What else do we have? Gross profit, which we mentioned. Loss from operations we mentioned. That's all fine. That's all fine. That's all fine. Try not to bore you. And the rest is the rest. That has to improve. Okay, so adjusted net loss is $1.1 billion, which is actually worse than the $1 billion last quarter. So, and worse, well, better than the $1.4 billion from the previous year. I like that picture. Okay, so yeah. I already mentioned this, the $1.5 billion facility. And then the other major issue is the Georgia facility. Now, the Georgia facility, as I mentioned, is going to be making the R2. This is a $5 billion facility. $1.5 billion of that will be in tax incentives from Georgia. So that means that Rivian will have to front $3.5 billion to build the facility. That's just to build the building itself. So there's going to be even more costs involved in order to ramp the vehicle. So this doesn't include wrapping costs for the R2 or other associated costs with the R2, like supply chains and whatever else. So Rivian does need some cash for this R2. As mentioned, this is expected to release in 2026. So they need to get their profits in line. They need to improve. Okay, to recap, yeah, Rivian needs to. It was a good quarter generally. The increase in their vehicle deliveries is good, from $52,000 to $54,000. The beats on the top and the bottom line is really good. Anytime you beat, that's a good thing. But the gross profit per vehicle needs to improve. It was still not good, and it's slowing. As mentioned, it's slowing down from the previous losses. So they need to substantially improve their gross loss per vehicle. So in general, I consider this to be more of a mixed quarter. Some things were really good, but they really need to improve this number. This is the number that they need to improve. They need the R1 to be gross profitable in order to fund their next platform. That's generally what Tesla does, is they make their previous product ramped and profitable, and then use that money to construct their next more mass-produced product until that one's profitable, and then sort of use that money going forward. It's difficult to do when you're losing money on that first vehicle on a gross margin basis. Before I check out, one last thing I would like to say is that this is actually on the incognito, private window. And this is my Patreon page. You'll notice that I am not logged in at all, so this would be as you see it. And I do have, these are free, actually, so you can just log in for free. I'll include a link in the comments. And I'm actually creating investment theses for various corporations. So for example, I have one here for NVIDIA. I have another one here for Block. I'm probably going to do one also for Rivian. Let me know in the comments below if you'd like me to do a Rivian investment thesis, or tell you what, if you want me to do another company, let me know that as well. And these are actually free. You can just log into Patreon. You don't even need an account. You just click on it and it downloads. Boom, there it is. You'll have it downloaded. You don't need an account. You don't need to pay any money at all. These are all completely free. As well, you can also visit the associated YouTube channels to visit the videos with these valuation models explained. And I'll be creating more valuation models every Friday. I plan to release a valuation every Friday going forward. So I call that, Valuation Fridays will be the name for that. So that's it. Thank you for your time, and I will see you in the next one.